Well, hello and welcome back to Principles of Accounting 2. I'm your host, Dr. B. We are going to start off our conversation today talking about process costing. Before we begin our conversation, I want to call your attention to the classroom. We are, if you can believe it or not, we're almost halfway through this 8-week course. We're in week 3. Uh, I hear you. Well, Dr. B, 3 out of 8 is not halfway. Well, it kind of is. So here's why. So we're in week 3. We're about to talk about process costing, chapter 20. And then we'll talk about cost volume profit analysis, also known as break even, chapter 21. And then you'll notice what's going on next week, midterm exam. It's like, oh no, Dr. B midterm, it's like, yeah, believe it, we made it halfway through almost. So after chapter 20, then 21, we're going to cover both those today. Next week, we won't have a lecture because you'll have your midterm exam. Actually, wait a second. Yeah, that's correct. Yeah, I thought, for some reason I thought I was losing my mind, but yeah, so the midterm exam. And I gotta take a look at that due date because it doesn't look correct. Yeah, it might be. No, we will have lecture next week. Let me just check. Looks like we might have lost pace. Let's see, 22, 23, 24, 25. Yeah, we will have lecture next week. I'm sorry. Because, yes, okay, that's why. So this course, technically the last day of the semester is April 30th. However, we have some graduating seniors in this course, or graduating students in this course. And so because of that, the final exam is also scheduled on April 30th. So everything is kind of pushed about a week. So we're okay. We're on track. We're good. We're refocused. Okay. I'll send out an announcement about that as well because this week is actually going to be a little bit busier than we anticipate. And the reason for that is because we have chapter 20, chapter 21, and the midterm exam. I'll push the midterm exam date back by a few days just so everyone has enough time to get it done. Because now I have to report the midterm exam grades and all that fun stuff. So, yeah, that sounds right. So, okay, cool. Did not mean to do that. Sorry. Okay, so for this week, chapter 20, chapter 21, midterm exam, and we'll talk all about those after the lectures. So let's go ahead first jump into our discussion on process costing. Last week, we had a pretty good conversation on the topic of job costing. Job costing, as you recall from the previous week, had to deal with specific customer orders. Job costing was specific to customer orders. That's why we call it job order costing. Specific to the job, if you will. And the job was based off the customer's order. So job order costing, we focused on allocating direct materials, direct labor, factory overhead to these things called job order cost sheets, and that tracked the cost for each job. And that was how we did job order costing. So to differentiate between job order costing and process costing, job order costing specific to the customer's order. Process costing, which is what we're about to talk about, has to deal with companies that continuously process the same stuff over and over and over again, regardless of the customer's orders. For an example, job order costing, we talk about cars, right? You know, that was the example we gave. There's a slide here. Job order costing, we talked about, you know, the individual jobs, like a vehicle, customer order. Yeah. Process costing is continuous, homogeneous products that we just make them, regardless of the customer's order. The example we'll talk about is tennis balls, but another great example would be ice cream. Ice cream is a process cost system. So manufacturers like Ben and Jerry's or Dryers or whatever your favorite ice cream company is, they use the process order costing system because they just keep making the ice cream. That's all they do. That's all they do is make ice cream. Okay, and it's continuous. It's a continuous flow. That's why we call it process. So that's the difference between the two. I'm going to go back to, because I want to talk about process, right? We call it process cost. We call it process cost system because there's a process behind it. It's the production of identical low-cost items like ice cream, like milk, chicken, beef, vegetables, pretty much anything you get at a grocery store. Anything you get at a grocery store typically was made by a company that uses the process costing system. Think of like General Mills, for example. They're huge, right? General Mills, they make a lot of the cereals, they make a lot of the breakfast bars, they make a lot of the daily things that we consume. General Mills is a huge company, and they use the process order costing system. They just keep pumping out the product. Okay, they have product lines, and they keep making the same stuff over and over again, like cornflakes or whatever. So they use process costing. Another example would be Tyson. Tyson is a large chicken processor, and so what they do is they will take care of the butchering process and all of that good stuff, and they'll turn the chicken into things like wings, chicken tenders, chicken thighs, etc. Right? They make all kinds of different parts of the chicken. They process the chicken. That's where the name comes from. They process it, and they put it in it goes through some cooking process or whatever, and then they put it in the bags and they send it out to the grocery stores. And that's why we say we call it a chicken processor. They process the chicken, and they do millions of chickens every year, and it's the same stuff. It's the same products that they're pumping out, and it's continuous. So that's one of the bigger differences between process and job costing is with process, it's continuous. It's the same stuff, mass production, and so that's what makes it a process, right? The cost in process cannot be directly traced to each unit. And here's what I mean by that. Tyson's chicken, when they're processing millions of chickens coming through each year, thousands each day, it would be next to impossible for me to attribute an exact cost, trace that cost of materials, labor, overhead to each piece of chicken. That is impossible. The reason why it's impossible is because this chicken I could get 5 pieces out. This chicken I could get 6 pieces out, etc. Right? So like there's variation to the output, right? And so, therefore, it is next to impossible for a processing company like Tyson's to be able to track direct materials, direct labor, factory overhead to each unit of output. With process costing, it's repetitive. It's a continuous flow. So, because we cannot trace the cost for each unit of output, we apply the cost of direct materials, direct labor, factory overhead, uh, based off of what we call units of completion or equivalent units of production. And we'll talk about equivalent units in a little bit. So the finished goods as they're being sold to the customers represents the total cost of processing. And so we'll talk about all these good things. But this just kind of explains what process order costing is. So anytime we think process costing, think they make the same exact thing over and over and over again without stopping, right? So an ice cream company like Dreyer's or Hershey or Ben and Jerry's, whatever, right? They just keep making millions and millions and millions and millions worth of the pints of ice cream, and it's all the same stuff, right? And it's repetitive, and so that's what we're talking about. That's the kind of companies we're talking about when we talk about process costing, which is much different than what we talked about last week with job order costing. So if we compare the two, in job order costing, which is what we talked about last week, we can allocate direct materials, direct labor, factory overhead to each step to work in process, to finished goods, and then the cost of goods sold eventually. We can track all of those costs to each job using the job order cost sheet. That's what we talked about last week. What we're going to talk about today is the process order costing system, where we track direct materials, direct labor, factory overhead to each department within work in process, and then eventually becomes finished goods. And we do this using what we call the equivalent units of production. So you'll see that at each step or each department within work in process, we're allocating a little bit more direct materials, direct labor, and factory overhead. The example on this slide shows us the manufacturing of tennis balls. The earlier example I gave you was Tyson's chicken. So if we think about how Tyson's goes through the processing of a chicken, the chicken comes in, they do the butchering part, so the butchering department or defeathering department, whatever you want to call it, and then it goes to the meat cutting department, and then it goes to the breading department, and then it goes to the the oven department, and then it goes into the bags as a finished good. But the chickens are flying down a conveyor belt the whole day, right? That's continuous, yeah. But as the chickens are flying down the conveyor belt, it's going through each department, and it's being processed a little further, right? So when the chicken is in the first department, the processing begins. So we're adding some direct material, direct labor, factory overhead. And then it moves to the next department. We add some more material, labor, overhead. And then it moves to the next department. We add some more material, labor, overhead. And then it becomes a finished good. But as it moves through each work in process department, we're adding a little bit more, adding a little bit more, adding a little bit more. And and the way that we track the cost for each chicken or each unit as it moves through the department is we do this process called conversion. So we're converting it from one department to another. We're converting it from one department to another. And we'll talk more about that. So that's the primary differences between the two. So if we use the example of the chicken or the tennis ball, whatever, or ice cream, any of those examples are fine. We see that the further along the conveyor belt that the product moves along, we're adding a little bit more cost, and we're transferring those costs with that unit. The costs don't sit in one department; they get transferred with the unit as it moves from one department to another. And that's what this slide represents. In the tennis ball example, well, the first thing that we do in work in process is we take some rubber cores and we form them. And then the next department in work in process, we're going to glue some felt onto to cover the rubber core. Okay, and then the next department we're going to package the tennis balls. But we can see that at each department, at each stage, there's some labor, there's some materials, and there's some overhead, right? And so as the tennis ball moves from one department to another, we need to also transfer the cost of that direct materials, direct labor, factory overhead for those tennis balls as it moves through. Does it make sense? Everyone kind of understands that so far? Yes, no, maybe.
Yes.
Thank you, Esmeralda. All right. Okay. Fantastic. And so these letters ABC represents these are the journal entries that we would make at the end of each month to represent the transfer of the units. So I want to point this out because this part's important. So the first letter, A, debit work in process felt department, credit work in process core department, represents the movement of the tennis ball to the felt department from the core department, right? Into felt, out of core. That's what letter A shows us. You'll see the note at the bottom. It says, transfer cost of partially completed goods to the next department. Makes perfect sense. But the words I want you to focus on are partially completed goods. When something is partially completed, it means it's not a finished good. It's not available for sale. It's in process, work in process. That's why it says partially completed goods, right? It becomes a completed good when it's finished. So the point is, I want you to understand partially completed goods because during the month, or at the end of the month, we need to account for the units that are in each department. That's why we allocate costs to partially completed goods. And we do that through the computation of what we call equivalent units. Okay, so equivalent units of production. This is, I'll give you the textbook definition and then I'll give you the explanation. Equivalent units of production is the number of units that could have been started and completed during the accounting period, given the costs incurred during the period. blah, 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 right? What that means is at the end of the accounting period, end of the month, I will go to each work in process department and I will allocate the cost of direct materials, direct labor, factory overhead to the respective number of units that have been started and possibly completed during the accounting period for each department. That is what we call equivalent units of production. Because remember, when it's in work in process, that means partially completed units. They're not complete yet. They're complete when they're in finished goods. So there is a mathematical formula that we use to calculate the equivalent units of production. And the formula is pretty straightforward. It's the number of physical units times the completed percentage. Now, you're probably saying, well, what the hell is completed percentage, right? Remember, when it's moving through those departments, the work in process departments, it's partially completed, right? So when I got to when the rubber cores for the tennis balls got to that first department, yeah, they're molding the core, right? That's the first department. Well, that might represent 20% of the completion process. The next department might represent 50%. And though if the tennis ball is in the last department, it might be 75% complete. And so this is what we mean by completed percentage. So we take the number of physical units and we multiply it by the complete percentage. You know, how much of that tennis ball is complete, right? And so that's how we find equivalent units of production. So if we break it down by this example, using direct materials, if I've used all of my direct materials already, that would be 100% of direct materials. So 10,000 units, 100% of the direct materials for those 10,000 units is 10,000. For labor, we're using 20% of labor to complete that 10,000 tennis balls, which would mean that we have equivalent units of production of 2,000. 10,000 times 20%. And the same for overhead. Remember overhead. Overhead, when we were talking about job order costing last week, we had said that overhead could be allocated based off of the single plant-wide rate method, meaning a percentage of labor, right? It's allocated by whatever management says that overhead is. It's typically like a percentage of direct labor hours. And I think the example we had last week was it was like 120%, right? And so the same concept applies when it comes to overhead. They will use the single plant-wide rate method to allocate overhead. In this example, it's 100% of direct labor. So if it's 100% of direct labor, that means it's also going to be 20% if direct labor is 20%. And that's where that overhead amount comes from. But just remember that the formula for equivalent units of production, the number of physical units times the percent that has been completed. Now I'm going to have to rewind a little bit more so you can understand how it's valued. you may remember these terms when we were in Principles of Accounting 1. We talked about the first in, first out method. And we also talked about last in, first out, and we also talked about this thing called weighted average. These, as you know, are inventory valuations. This is how we figure out how much inventory we have on hand, how much it's worth, right? And because we are talking about process costing, and most businesses that use process costing deal with perishable items like chicken or like beef or vegetables or milk or food. It's mostly food stuff. We know that most food uses the first in, first out method because it expires, right? So you want to make sure that whatever came in first is the first one out the door. So if I'm Tyson's Chicken and I got a chicken that just came in, that chicken better be the first one out because if it's around too long, it goes bad. So that's why the vast majority of process businesses will use the first in, first out method for valuing the inventory that's on hand, and we do that for each department. So I want to show you the differences between the weighted average and the first in, first out method, because a company could decide to use weighted average instead. So weighted average, as you know, is a lot simpler. What we're doing is we're taking all of our purchases and we're dividing it by the number of purchases, right? So that gives us the weighted average, yeah? And so if you use the weighted average method for valuing the inventory, there are 4 steps that you need to follow if you're applying the weighted average cost system to process costing. And the first thing we need to know is the physical flow of units. So if you think about like a conveyor system, or like a conveyor belt, or if you think about a warehouse, I got goods that are coming in, raw materials that are coming in from a truck, and so I take my raw materials and I put them into work in process. And in work in process, it starts at that end of the building on the conveyor belt. And then as it goes down the conveyor belt, it reaches the second department, work in process. And it moves further down the conveyor belt, reaches the third department, work in process. And by the time it reaches the end of the conveyor belt, it's in finished goods. So the first step is to understand the physical flow of the units. The second step is to compute the equivalent units of production using the formula we talked about earlier. Equivalent units of production, we're taking the physical amount of units times the percentage that has been completed. Once we know the equivalent units of production, we can then, step 3, compute the cost per equivalent unit. So get down to the unit level. And then the last step is to assign and reconcile any remaining costs. So first, the physical flow. Here is an example of a physical flow looking at a warehouse for the production of, let's say tennis balls. That's kind of the example, right? Or whatever, it could be anything. So here's what we're processing, okay? So on the left side of the diagram, that's the loading dock for raw materials coming in. And the raw materials coming in, they get stored in what they call a storeroom. When they're needed, for production, they're taken out of the storeroom and they're moved on the conveyor belt. The first department here just so happens to be what they call the blending department. They're doing the scientific stuff, right? They're forming the cores, the rubber cores for the tennis balls, yeah. And then it moves down this conveyor belt. And it's moving down the conveyor belt. It gets to like this big machine. It goes to a roasting department and then becomes a tennis ball. Okay? And then from there, it gets boxed up and then put onto the right side of the diagram, which is the warehouse where it's ready to be shipped out to the wholesalers using the distribution channels. So we can see and understand the physical flow of the units as they move through the production process. Okay. So now that we know the physical flow of the production process, we can identify our cost per equivalent unit. And we can also figure out our conversion cost. But let's take a look at this information. And remember, this is using a weighted average. And as you recall, weighted average is all of our purchases divided by the number of purchases. You get the average, yeah? So, having said that, we first need to find the total units accounted for. And to do that, we take beginning work in process inventory plus the units started in the new month minus the units completed and transferred out during the month to equal the ending work in process inventory. The units accounted for, we take the beginning work in process plus the units started during the accounting period. And we can see that that amount should equal the units completed and transferred out plus the ending inventory. And as long as those two equal, we've found the correct amounts to be accounted for. We've so 120,000 in our example are the number of units that we need to account for. We have also the percentage of completion, right? So direct materials, it's 100% for the beginning work in process, the units completed and transferred out, and for the ending work in process inventory. So 100% across the board. So direct materials, 100%. 100% of it was used beginning balance and transferred out and in the ending balance. So that's our percentage of completion, 100% direct materials. We also have this thing called conversion percentage. Conversion is when we are converting the cost from one department to another. Converting from one department to another. Conversion costs. We're converting the cost from one department to another. And getting work in process, 65% of that has been converted. Units transferred to completed, 100%. Ending work in process is 25% converted. Conversion cost kind of like saying, hey, that's the percentage that has been converted into a complete unit. That's how you should think about it. And so now that we have this data, we can then find our amounts for work in process. Direct materials cost $81,000. Conversion cost $108,900, giving us a total conversion cost of $189,900. During the month, we also incurred direct materials cost $279,000. We incurred labor costs of $171,000 and factory overhead of $205,200. The $205,200 represents 120% of direct labor. Remember, factory overhead, the reason why it's 100% is because the company is using the single plant-wide rate method, and that is the factor being allocated. We add up all of our costs that have occurred during the accounting period, $605,200. That means our total production cost is $845,100. That came from the total conversion cost plus the costs incurred during the period. Gives us our total production cost. So the formula for total production cost are conversion costs, costs from the beginning work in process inventory plus the total production cost. Plus the cost of the count. Okay. Total production cost comes from taking the beginning work in process inventory cost plus the costs incurred during the accounting period. So step one was to determine the physical flow of units. We have identified the physical flow of units by looking at the beginning work in process inventory plus the number of units started during the accounting period. Gives 120,000. We know this is correct because the units transferred out during the accounting period was 100,000 plus the ending work in process inventory of 20,000 also equals 120,000. So we've determined the physical flow of units by seeing what came in and what went out. The second step is to compute the equivalent units of production. And we do that by taking the number of total units completed and transferred out to the next department. Whole units completed. Plus the number of equivalent units in the ending work in process inventory. That's 120,000. At least for direct materials it is. How do we know that? Units completed, transferred out, 100,000. Ending work in process, 20,000. So equivalent units of production for direct materials is 120,000. We also need to find the conversion amount. How many units have been converted? Well, the equivalent units completed and transferred out is 100,000. 100% was converted. The direct materials was all allocated to direct materials, obviously, so you don't need anything on that line. But we have a line item for conversion. And the conversion percentage was 25%. So 20,000 units of direct materials. At 25% was 5,000. And so that's how we find the direct materials, equivalent units of production, and the conversion for the equivalent units of production. So 120,000 direct materials, equivalent units, and 105,000 for conversion. The third step is to compute the cost per equivalent unit. And the way we do that is we take the cost of the beginning work in process inventory plus the cost incurred during the accounting period to get the total cost. We take the total cost and divide that by the equivalent units of production that we found in step 2. So total cost divided by equivalent units of production gives us the cost per equivalent unit of production. $3 a unit for materials, $4.62 for conversion. Makes sense, right? You all good so far? Yes, Ismail.
Yes, Professor. I'm sorry.
Akia, it's all good.
Yes, I'm here. I'm with you.
Okay, excellent. Ismail, do you have a question?
I was trying to press the thumbs up thing and I clicked
That's
the hands
okay.
up.
That's all right. It's all good. I appreciate it. I like the thumbs up. All right. And the last step is to assign the other costs and reconcile. Now, the other costs typically come from the cost of ending work in process inventory. So we have costs of units completed during the accounting period by adding direct materials plus conversion. We also have the cost of the ending work in process inventory taken by direct materials and conversion from ending work in process. Gives us the total cost accounted for. And here is the summary of the costs. So we have the data set at the top. Step 1, we identified the physical flow. Step 2, we identified the equivalent units of production. Step 3, we identify the cost per equivalent unit of production. And step 4, we assign the cost and reconcile. It's all about following steps. I mean, that's almost everything in accounting is just following the steps. Once you follow the steps, I promise it'll be easy. Just follow the steps. Okay. So yeah, following the steps. Oh yeah, I wanted to show you the overhead. So I showed you the work in process. So the work in process, everything there on the left, work in process. And of course the materials. What we have on the right is our overhead. Well, kind of our overhead. Work in process, we have our labor and our overhead. The labor represents the direct labor and the indirect labor. The overhead represents technically indirect labor, insurance, utilities, depreciation, and other stuff. Overhead, right? So we have our that just kind of shows you the additional stuff that goes into preparing this product cost summary, process cost summary. Okay. For materials. For materials, we purchased the materials, the raw materials. So we debit raw materials inventory, credit accounts payable. We bought it on account. Materials, we got to buy them from somewhere. So I have to buy the raw rubber, the felt, the glue. I got to buy that from somewhere if I'm making tennis balls. So I buy my raw materials. Debit raw materials inventory, credit accounts payable. If we're paying on credit, otherwise it's cash. Right? I then assign costs to work in process. So I'm going to take what I need out of raw materials and put it into work in process. So debit work in process inventory, department X. Debit work in process inventory, department X, right? Or whatever department it's in. And then credit raw materials inventory. This represents the movement of the raw materials into work in process. And of course, you still need to assign factory overhead, right? The factory overhead needs to be assigned. So the third transaction is we would debit factory overhead, credit raw materials inventory to represent any raw materials that may have been used indirectly. That would be like glue, right? Yeah, remember, it's the smaller things that are indirect materials. So in the tennis ball example, the glue that holds the felt to the rubber, that is an indirect material. It does not make up the majority of the cost of the tennis ball. We follow a similar process for assigning labor costs. So direct labor, indirect labor, those get recorded based off of where the employees are. So if I have employees that work in the roasting department and employees that work in the blending department, I need to assign those costs to each department. So debit work in process for each department. And what that does is it allocates the cost of labor to each department. And again, it depends on where the employee is assigned to. If you have an employee in roasting and one in blending, you want to make sure that you allocate the cost of that labor to those respective departments. And then you credit wages payable. You got to pay them, right? Now, we also have indirect labor, like the support staff, in HR, in the accounting office, in the sales department, and then you also have like the supervisors. So we debit factory overhead and credit factory wages payable. Because remember, indirect labor gets assigned to factory overhead, not to direct labor. And then we got to pay our employees. So when you pay your employees, you debit wages payable and credit cash. Got to pay them. So we talked about materials, we talked about labor, and now, of course, we need to talk about overhead. Overhead includes things that are indirect and part of operation, right? So that would include things like insurance, utilities, depreciation, etc. So we debit factory overhead, and then we credit all of those things. Insurance, utilities, depreciation, supervisor salaries, cash used for indirect materials, etc. And we then need to apply that factory overhead to work in process. And the way we do that is we debit the work in process accounts and we credit factory overhead. Again, it's all about the steps. You just follow the steps. That's really what it boils down to. As goods are moving down the conveyor belt or from one department to another, we need to record the transfer of those goods. So as the goods are moving, we need to track the movement. And the way you do that is by debiting and crediting the respective departments it's coming in and out of, right? So it's going into a department debit, it's going out of a department credit. So debit, blending, credit, roasting, that shows the movement from the roasting department to the blending department. And then after it's done in blending, it becomes finished goods. So this 9B represents the movement of from blending to finished goods. And then when we sell it, it becomes cost of goods sold. So debit cost of goods sold, credit finished goods. So processing, it really depends a lot in the type of business that we're talking about. So like Tyson's Chicken, Purdue, all of the companies that have anything to do with produce, um, anything that's perishable, really. A lot of those companies use process costing. They would include things like companies like General Mills, or you name it, right? All the companies that process perishable products typically are involved in process costing. Remember, process costing is continuous, usually homogeneous, or the same products, and they are really based around process and a conveyor belt type system. There's a lot of trends. Robotics are enhancing the field to assist the humans in production. Just-in-time production is becoming a bigger thing. There's additional services. It's around, we do everything around the customer, that type of thing. But those are just like trends that are happening in the area now. There are ways to use both job order costing and process costing at the same time. We call that a hybrid costing system. So you're taking job and process and integrating the two. It's very difficult to do that, and it's a pain to track all of those costs. So that's why most companies will select one or the other, usually not both. But there are some companies that do both, right? It's like kind of like General Motors, right? Like they'll process the same automobile and they'll just pump a bunch of them out regardless of the customer's order, right? So they might use a hybrid system, or maybe there's a special order that comes into General Mills, or they're going to run a holiday special blend of cereal or whatever. So they might use a hybrid costing system for that, because it's like kind of like a one-off type product, and those are reasons why a hybrid exists. But for this course, we're not going to dive deep into that stuff. And really, a lot of everything we talked about today is really basic when it comes to process costing, because it could get really complex, I'm sure, as you're noticing. So the last part I want to talk about is the first in, first out method. As I mentioned earlier, this method of tracking the cost is usually done by companies that have perishable products. First in, first out. You want to move it quickly, right? And so this shows us how that's applied. Very, very similar to weighted average, but obviously the difference is first in, first out. We're looking at the cost of the first purchase in order to identify the cost that is being transferred out first. So we usually go with 100% completion of direct materials. This one has 65% conversion costs. Don't worry, in any type of homework assignment, that information will be given to you. So you don't have to be like trying to figure out what is the conversion, right? Direct materials cost, conversion cost. Then we have some other information. Units started at the beginning of the period, transferred out. Direct materials cost, direct labor cost. The 120% allocation of overhead. Number of units during the period. So forth and so on, right? So we followed the same process for first in, first out as we did with weighted average. The first one we do is determine the physical flow of units. So beginning work in process inventory plus units started during the period gets me the number of units that need to be accounted for, 120,000 units. I reconcile that information with the number of units that were completed and transferred out plus the ending inventory, and that gives me the same amount. Right, that's what I'll call reconciling. Also important to note, like how we found units that have been transferred out. Beginning inventory plus units started will give me units transferred. The second step, again, the same. Compute the equivalent units of production. And the way that we do that is we take the units, equivalent units to complete beginning work in process. So beginning work in process balance. And then we have equivalent units started and completed. And then we have equivalent units in the ending work in process. And we add them all up. Now remember, it's the number of units, number of partially completed units times the percentage complete, right? Number of partially completed units times the percentage complete. That's how we find things like conversion cost. And so, yeah, that's the process. Now, important note here, the units completed during the period minus the beginning work in process will give you the units that started and completed. So all this to say, if there's a number that's missing and the problem is like, hey, solve for this missing number, you can work backward to find that missing number. Right? That's just a little hint there, just in case you're curious. The third step is to find the equivalent units per unit, cost equivalent unit per unit. And the way we do that is we take the cost incurred during the period that we got from our information, divide it by the equivalent units of production that we got from step 2, to give us our cost per equivalent unit of production. So it's very, very similar to the weighted average method. We can see it's slightly different with respect to the cost, and the reason for that is the method itself, first in, first out versus the weighted average. And that oftentimes first in, first out will give you a higher cost than it would for weighted average, in most cases. So the last step is to assign and reconcile the costs. And so we take cost of beginning work in process plus our cost to complete the beginning work in process plus our cost of units stated and completed during the period to equal the total cost of units finished and completed and transferred out plus the total cost of ending balance equals the total cost to be accounted for. That's how we would assign and reconcile units. It's basically, yeah, the shorter part of it. The conversion side, sorry. And that, my friends, is the end of our discussion for our process costing. Any comments, questions, concerns on process costing before we jump into our discussion on break even? Y'all good? Okay.
Yes, I'm good.
Awesome, thank you. I'll stop this part of the recording, and then I'll start the recording on break even.